Hello and welcome to the Fibonacci free video for Monday, July 25th. This is David and we're going to kick things off taking a look at Walmart, which after the close today came out with an earnings pre-announcement. These are rarely good when a company has to come out before their earnings, just a few days away, and let the market know ahead of time that they are going to miss by 8 or 9% on their EPS, and also guide down for the whole year. And the market did not take kindly to it. Not only taking down Walmart significantly, we'll drill in to take a look at that in a minute, but also taking down Target, Amazon, and others. Look, Walmart's been under pressure since it gapped below its Voodoo Fire line and ran to the downside. It's tried to recover, just like the overall market has, since mid-June, reaching recently in the past few days up towards its 132 and 14 cent Voodoo tree line, the second most important of those Voodoo line levels behind the fire line. And these levels, which incorporate principles of Fibonacci and Elliott wave, can be really useful. You see, we finished the day here, and then this news came out and sent it down not just to but through this 123 and 29 cent Voodoo tree line. And so long as we stay under that level, this name will be seen easily as under pressure. So keep an eye on that. Of course, what I'm most concerned with, and I keep telling y'all I'm most concerned with, while we're unless or until we can confirm that we're out of a downtrend, is the broader markets. So for that, I'm going to want to look at the S&P 500. And a few things that we can look at there. First of all, its most important Voodoo line in the area is right in here, right by 39.17, 39.16 and 89 cents. Breaking below and holding below there, I think, would be an important level. So keep an eye on that. Also nearby, right, just above those, if we look to the break of this swing low from late last week, taking that out would also be important, but that's also at another important spot. From our pure Fibonacci analysis, that's where we get to symmetry to this move down from last Monday, from last Monday's high to last Monday's low. And for now, that's the biggest decline that we've seen up in the move off of this July 14th swing low. And so if we break symmetry, go further than that, and particularly if we can stay below that level, that will suggest that that we're in the biggest pullback, right, since the 14th, and that then we have the potential to continue. So so what I would watch to see if this is hitting and continuing looking like it could take down the broader indices is whether it can get us through these levels. Of course, you only have about 12 points between these two. So while a break of symmetry and this swing low pretty much at the same spot would be meaningful, we want to see this get and hold below 39.16 and 89 cents, the Voodoo snow line. And if it can do that and keep pushing to the downside from there, that's what we would want to see to convince ourselves that this was hitting the indices more broadly. Of course, there are a lot more earnings tomorrow morning. Those could change the picture really quickly, just like Walmart has. So we'll need to wait and see. But that's what I have. I hope you found it useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.